Good afternoon and welcome to Beside Asian Midday Market Watch. It's Thursday, the 18th of April, and I'm Samantha Voon. Our guest today is David Kuo, founder of The Smart Investor in Singapore. David, welcome to the show.
Good afternoon, Samantha.
Yeah. Okay, let's look at how markets are performing across the region today. Okay, looking good. So we have the Japanese Nikkei 225 up 0.23%, the Shanghai Composite up 0.56%. In Hong Kong, the Hang Seng is up 1.03%. In Australia, it's up 0.42%. The South Korean Kospi is up 1.58%. In Singapore, the STI is up 1.23%. And in Kuala Lumpur, it's up 0.25%. David, what's happening? What's happening here?
Did I hear you say that it's looking good just because it's a sea of green?
Yes.
Is that exactly what you said?
Yeah.
What is good for you? Yeah, what is good for you is not good for me, Samantha. I want to see a sea of red rather than a sea of green because I'm a buyer of stocks. But I understand what you're saying. Yes, I mean, the stock markets are up at the moment. Nobody likes to see a down stock market apart from me. I love it when stock markets are down because it means that I can go in there and buy more of the stocks I like at a cheaper price. But having said that, the stock markets are up today because I think they've got over that shock of the revelation from Jerome Powell, the Fed chair, who was warning that interest rates are going to be a lot higher than expected for longer. And there are now speculations that, number one, interest rates may not be cut in 2024. And number two, interest rates may even rise in the US in 2024. So I think Asian markets have got over that shock now, and then they're just going back to business as normal, which is a little bit unfortunate for me, which means that they can then go in and just start buying the stocks that they like.
Mm-hmm. And is that also why the US inflation is stubbornly high? Right?
Yeah.
For all of this.
Yeah. I think, I mean, if you have a look at the data that's coming out from America, number one, the employment numbers are still very strong. Number two, consumer spending still looks fairly strong. Number three, the economy is growing at the moment. And then number four, as you quite rightly said, inflation is not coming down as the Fed would expect. And people are now going around sort of saying, why is that? Why is American inflation still so high when interest rates in America, the Fed fund rate, is between 5.25% and 5.5%? Why is it not working? And there are lots of theories about why it is not working, why America is still growing. One theory is that this thing called the neutral rate, I mean, this is the interest rate that the Federal Reserve thinks will allow the American economy to grow. In other words, not decline, whilst at the same time keep a cap on inflation. And some people are saying that maybe the neutral rate is not where it is at the moment, but should be higher. And so therefore the Federal Reserve should increase interest rates. That's one theory. The other theory is that maybe Americans just have too much cash. That is one possibility. Not all Americans, but those people who do have a lot of cash are actually reaping the benefits of higher interest rates. I mean, put yourself in the position of somebody who has millions of dollars and they're going, I stick it in the bank, I earn 4%, 5% interest on that. I can take the interest and I can go out and spend the money. That wasn't the case, say, a few years ago when interest rates were at 0%. No matter how much money you put in the bank, you weren't getting a return on the money. So therefore you had no spare cash to spend. And so maybe what is happening is that the high interest rates is benefiting those people who are cash rich, and they're being able to take that money, go out and spend it, and then drive the American economy. So if they want to bring inflation down, maybe they need to be counterintuitive and to cut interest rates, which is the wrong thing to do, cut interest rates so that these people who have surplus cash don't have that extra income coming in from their bank deposits. And so it's a difficult situation, I think, for the Federal Reserve to be in at the moment because they don't know which way to turn. And that, I think, is quite dangerous for us.
Yeah, that's very interesting. Okay, we also have the US dollar having its momentum, right, for the past 2 weeks. So with it being at this momentum, what can emerging markets do about the mighty US dollar, David?
I think you need to get a guy from Bank Negara to come on the show and explain and try and explain what they are planning to do about it. Look, the US dollar is strong at the moment. And when you have a look at the US dollar, part of the reason why it's strong is number one, because the American economy is growing. Number two, American interest rates are relatively high compared to other interest rates. Number three, you've got this fear factor going on. We've got conflicts over in the Middle East. We've got conflicts over in Eastern Europe. And so people are saying, well, a good place to put our money is maybe in the US dollar because it is ultimately a safe haven. So people are piling into the US dollar, driving the US dollar higher, and it's causing a lot of problems for emerging markets. You only have to have a look at Malaysia, Samantha, where you are at the moment, and you have a look at how the Malaysian ringgit is faring against the US dollar. What is it now? About a 25-year low, 26-year low against the US dollar? I mean, what is Bank Negara going to do? If it tries to intervene by buying Malaysian ringgits, selling the US dollar, how much do they have? I mean, it's almost like throwing a ball up a hill and expecting it not to actually roll back down again. It's going to roll down. So whatever you try and do, in other words, whatever you try and throw at this foreign exchange market to try and bring your own currency up, it's just going to be a waste of money. And so I think the best thing for them to do is to do nothing. Right? Just wait for the US dollar to come back by itself. It's going to be very painful, particularly for people like yourself, Samantha. I mean, if you want to travel, you're earning in Malaysian ringgits, you're going to say, well, I think I'll put off that trip at the moment. I'm not going because it's far too expensive to go anywhere. And so I think there is nothing we can do about the US dollar until such time that it will just turn by itself. And hopefully that won't be too long away. And going back to what we said right at the beginning of the show, Samantha, when American inflation starts to come down, the Federal Reserve can cut their interest rates, and then we'll be able to get somewhere. Because otherwise, it'll just be, as I said, like throwing a ball up a hill and hoping that it doesn't roll down. And guess what? It always rolls down.
I was just also looking at the charts and saw that it hit resistance and now only just retracting a bit. So hopefully that resistance level holds.
Let's hope so.
David, David, let's talk about the AI space, right? So with AI technology becoming so efficient and more people are really adopting this into their business, David, what's a safe way for investors to play the AI revolution?
Okay, I think it depends on how much you know about artificial intelligence or AI or large language models. I think we've reached the point now where we have to say that I think AI is going to be a game changer. And people are betting on certain technologies. For instance, people are thinking that NVIDIA is going to be the next big thing, and let's all go in and pile in and buy NVIDIA shares. But why? Why NVIDIA? Why not AMD? Why not Intel? And I think that is the problem that people have. How do you know that NVIDIA is going to be the 600-pound gorilla that is going to control artificial intelligence? I don't buy into that idea. I think that there'll be other chip makers out there who will do a pretty good job. Who's to say that Apple's M1 chip won't be able to compete with NVIDIA's chip? And so if you are playing that kind of game where you're betting on which chip is going to be the winner in AI, I think it's going to be a very dangerous way to play it. The way I look at it, Samantha, is that I know that AI is going to be around. And I also know that AI is going to be very energy intensive. I mean, they're already talking about how much power is going to be required in order to answer all those AI questions that people have. And so therefore, maybe the way to play it is to have a look at the energy sector rather than the chip sector. It is what we call the picks and shovels. In other words, during the Great American Gold Rush, the people who made the most money weren't the gold miners, Samantha. They were the people who sold picks and shovels, because there were so many people out there wanting to prospect for gold that the people who were selling the shovels and the picks were the people who made the most amount of money. So I think similarly with AI, we accept that AI is going to be around. AI is going to be the next big thing. But maybe the people who are going to make the money are going to be the energy companies. And in Malaysia, you've got a company called Tenaga. So if AI takes off in Malaysia, who's going to benefit? Tenaga, because those companies are going to be drawing more power off the grid and they're going to do well. What about ITL or YTL? They're going to do well. Here in Singapore, we've got energy companies, so Semcor Industries. So if you have a look around, there are going to be many energy companies that I think will benefit from the AI revolution rather than the chip makers themselves.
Mm-hmm. Yeah, that's definitely it. And I also remember you mentioning this the last time you were on the show. I suppose it's really time for us to look into, like you said, energy sectors, energy companies, yeah?
And there is one other thing, Samantha. These energy companies pay a dividend, and many of the chip makers that you talk out there don't pay
Mm-hmm.
as great a dividend as I would enjoy in my portfolio. So therefore, I'm looking for income. I'm not looking for speculation.
Mm-hmm. Wise words. That's right. Okay, David, thanks for your insight.
Thank you.
We've been speaking to David Kuo, founder of the Smart Investor in Singapore, on BizTech Asian Midday Market Watch. I'm Samantha Voon, and this video and podcast will be on our website, www.biztech.asia, and social media platforms. It will also be on our syndication partners' TV stations, radio stations, and websites. Remember to like and subscribe. Thanks for tuning in.